Have you ever wondered how day traders consistently find opportunities in the stock market? Whether you're new to day trading or just looking to sharpen your skills, having the right strategies can make all the difference between a profitable trade and a painful loss. I have spent years in the markets, experimenting, failing, and refining strategies that actually work. And today, I will share my favorite day trading strategies that you can start using right away. From moving average crossovers to scalping, we will dive into what these strategies are, how they work, and when to use them. First, let's make sure we are all on the same page. Day trading is about buying and selling stocks within the same trading session, closing all your positions before the market closes. The goal? To capitalize on short-term price movements. Now, here is the thing. Day trading isn't about luck. It's about timing, discipline, and most importantly, having a plan. Without a solid strategy, you are just gambling. Trust me, I have been there. Early on, I would jump into trades based on hunches, and guess what? I blew up my account in no time. So let's keep the guesswork and jump straight into proven strategy that I have personally used. Alright, let's start with the classic, the moving average crossover. This strategy is simple but effective, and it works well for spotting momentum shifts. Here is how it works. You use two moving averages, a short-term one like the 9-day and a longer-term one like the 20-day. When the shorter moving average crosses above the longer one, it signals a potential buy. When it crosses below, it signals a potential sell. Let me share a real example. A few weeks ago, I was watching AAPL. The 9-day moving average crossed above the 20-day just as the stock broke out of a consolidation pattern. That crossover gave me a clear buy signal, and I rode the momentum for a quick 4% gain. The key here is to combine this with other indicators like volume spikes or support and resistance levels for confirmation. Next up, we have breakout trading. This is one of my favorites because it's all about capitalizing on stocks that are ready to make big moves. Here's how it works. Identify stocks that trading within a range, look for clear support and resistance levels, wait for the stock to break above resistance for a long trade or below support for a short trade. Enter the trade as the breakout happens and set a stop loss just outside the range. Let me give you an example from my own trading. I was watching AMD earlier this year, and it was stuck between $153 and $163 for hours. Then the stock broke above $163 with massive volume. I jumped in right after the breakout, set my stop at $158. And within 2 hours, the stock hit $184. One pro tip: not all breakouts are equal. Watch for volume. A breakout without volume is often a fake out. Join my Telegram channel for exclusive hand-picked trading signals shared directly by me. Each signal includes detailed entry points, stop loss levels, and profit targets, giving you a clear and actionable plan for your trades. I only share the strategies I personally use and trust. Helping you avoid costly mistakes and maximize your profits. Don't miss out. Click the link below the video to join now and start receiving expert insights and updates that will keep you ahead of the market. Now, if you are someone who loves fast-paced action, scalping might be your go-to strategy. Scalping is about making lots of small trades to capture tiny price movements. Here is what you need to know. Look for high-volume stocks with tight spreads. Use 1-minute or 5-minute charts to spot quick opportunities and focus on small gains. Think 0.10 to 0.30 per trade and get out fast. I remember a day when Apple was moving in a tight range. Using scalping, I made 3 trades within an hour, each for a 0.25 gain. It doesn't sound like much, but those small wins added up to $750 by the end of the session. Scalping requires intense focus and quick reflexes. If you are not someone who can handle fast decision making, this strategy might not be for you. Let's talk about a more advanced strategy, VWAP reversion. VWAP stands for volume weighted average price, and it's a great tool for spotting overbought or oversold conditions during the day. Here is how it works. Watch how the stock trades relative to the VWAP line. If the stock moves far above the VWAP, it might be overbought. Look for a reversal back toward the VWAP. If it drops far below the VWAP, it might be oversold. Again, look for a reversal. This strategy is perfect for mean reversion traders who like to buy the dip or sell the rip. But like any strategy, it works best when combined with other signals like candlesticks patterns or key levels. Now let's get real for a second. No strategy will work if you don't manage your risk. One bad trade can wipe out a week's worth of gains, and I have learned that the hard way. Here is what I always do. Set a stop loss on every trade. Know your exit before you enter. Stick to a risk-to-reward ratio of at least 1 to 2. If I'm risking $100, I want the potential to make at least $200. Don't overtrade. If you hit your daily loss limit, walk away. Discipline is key. So there you have it. 4-day trading strategy that I have used successfully in the stock market. Whether you are into moving average, breakdown, scalping, or VWAP reversion, the key is to find what fits your style and stick to it. If you found this helpful, hit the like button, subscribe, and drop a comment with your favorite day trading strategy. Don't forget to join my Telegram channel through the link below the video for exclusive trading signals and expert insight that will keep you ahead of the market. And if you want to dive even deeper into day trading, be sure to check out the next video. It's packed with more advanced strategies and tips that you will not want to miss. Thanks for watching, and I will see you in the next one. Happy trading!